looking at the kind of market momentum and inertia and the stage of the market we are in India, you can safely ignore global cues.
Yeah.
You could say, okay, yeah, I'll mark them, I'll measure them, but I would not react to them. So Wall Street had a day out, dollar index a little bit here or there, nothing meaningful in terms of the bond yield movement, and nothing, thankfully, has come on the Trump, at least on the tariff front. So you want to acknowledge global cues, you want to measure them, but you do not want to react to them. But the story is India. Let's look at it. Look at the comeback from the recent low. And the comeback from the recent low, let's look at that data please. From the recent low, which is what markets made, and I'm talking about pure Nifty, I think the market rally, excuse me, has been nothing short of breathtaking. First, it was a function of short covering. Then, I think the market is clearly tilting towards long bias. The concerns in the world, or the concerns for Indian market, high dollar, strong yields, FI selling, short selling, all of them surely seems to be getting diluted. Now the question, Aisha, is that is this beginning of a new trend, or this is an oversold bounce which is bouncing back, and another couple of percent point, 2-3% here or there, maybe 5-7% on large cap stocks, will it run out of breath? There is no decisive answer because markets are not exactly bombed out in terms of valuations. Earnings will recover, but they will not. They will recover gradually, and global terrain, which is looking stable today, could be topsy-turvy depending on what actually comes out from 2nd of April. My personal sense, Aisha, is that I think this market will be in a healthy shape at least till 2nd of April. And I'll tell you why. Because there is no other news. Second, large part of the market is still short. And see, the high frequency data points, at least locally, have been strong. And considering that FI positioning is still short in the market and the average institutional investor is still short, they could be forced to cover their short positions. I doubt that some of these hedge funds and FIs, they will run into the event with a short bias when you have a 2nd April deadline coming in terms of tariff. So I think short covering, the FOMO effect, and some repair work in mid-cap stocks, I think is at play now.